Hey, we're back again, Joe and Steve. We're going to talk about three major points that's happening in the Florida real estate market now. More important stuff that you need to know if you are looking to purchase down here in Southwest Florida. Also, if you're looking to move down here. Joe's going to talk about the bond yield, how that's going to be affecting your future purchase with the current rates. And I'm going to talk to you about what's currently happening in the market. Joe, take it away, buddy.
Yeah, thanks. So a lot of good things have been happening in the mortgage market. If you guys have been watching lately, you have seen some good relief in interest rates for the average Joe out there, no pun intended. If you want to keep a really good eye out on what's going on with mortgage rates, you simply just want to go to Google, look up Yahoo Finance, and you can look at the 10-year Treasury yield. And very simply, on that yield, as that yield moves north, so does mortgage rates follow with it. If that yield moves south, where we all want it to go, typically mortgage rates are going to move down as well. Now, over the last 60 days, 50 to 60 days, we have seen a gigantic improvement in interest rates. The yield has come down tremendously. It continues to come down. And just over the last 45 days or so, I've seen interest rates move anywhere from 0.5 to 0.75% in rate. So for you buyers that have maybe been sitting on the sidelines waiting for the opportunity to say, put me in, coach, get me back in the ball game, now might be the time. And especially some of you current homeowners that maybe are sitting on 7.5%, almost 8% in interest rate, now might be the time to talk to somebody about refinancing. So that's the good stuff that's going on in the mortgage world. I'll turn it over to Steve and let him talk about the real estate world.
I got one question for you though. Like, where do you see these rates in 1 to 2 years from now, based on what you're seeing?
Man, Steve, that's a tough question.
Come on, buddy. You don't got a magic.
I don't have the crystal ball.
Pretend you do.
You know, I mean,
perfect world.
In a perfect world with some of the things that are going on currently in the administration, I see inflation coming down, which then if you feel like I do that rates are tied to inflation, I think you're going to see a great improvement in rates. Are we ever going to see 2020 levels again?
No,
I don't think so. But I think we're going to get back down to normalcy,
like 4 or 5%,
4.5 to 5% in that ballpark, nice. For sure.
That's nice.
Yeah.
Great news. That's awesome. We like to hear that, obviously, because we have a bunch of stuff tied up with clients, and we're doing some other kind of loans that we're banking on them for 2 to 3 years to be locked in one product to get out and then get into a lower rate. But we'll talk about that later.
100%.
So look at the real estate market currently right now. Like what we're seeing, especially in the resale market, everyone's kind of towed. Like everyone's kind of tied to each other, not really moving on pricing. So what we're doing even with sellers are being more aggressive on pricing. And it's not like our sellers are losing money unless you purchase in 2021. A lot of our sellers have purchased 10, 15 years ago, so they've actually doubled their initial investment. So if they're selling out, they have a little bit more room to negotiate. What we're also seeing too is the new construction is flying off the shelf currently right now. We're obviously residents of Rodana Village. I watch that market very closely. We've had Pulte last month sold 21 houses. Lennar sold another 16. That's almost 40 houses in a slow market, let's just call that. But they keep unloading products, and that's what we're seeing currently right now. And then what we're focusing also as a professional and also an investor, because I do build houses as my other company, we're looking at days on market, like months of inventory, and that's what we're looking at. And if you talk to some realtors currently right now, they're a little bit confused, even if they've been there their whole life. If you're not really looking at data, currently our months of inventory right now are really pretty much what Florida is normally. Because if you look at 2015 to 2019, the average months on market is like 8 to 9 months, which we're currently now as a single family in Estero Bonita. Naples is actually 2 months lower than, let's say, 19. And remember, 19 is pre-COVID. After
Correct.
2020, that's when things gone havoc and we had no inventory. So what I'm advising clients now, like either you're buying seasonal properties for yourself that you can lease out temporarily to kind of offset expenses and then enjoy the other portion of it. kind of jump in now because especially if you're a foreign national, we got Joe. Or if you're even a naturalized citizen here in the U.S., like you got those products, those DSCR loans, you can kind of tap in real quick, like secondary property ownership.
Yep.
I mean, these are great products, and we can kind of bump you out of them as we move on. And then also for straight investment properties, that's another great product that Joe can advise you on. And also, if you're looking to live here, ultimately, it's a great time because you're buying these houses about 20-25% below market value from, let's say, the height of 21. So let's just say that. We know that this market can't go any much further down. Like you might see another 3 to 5%, but then that's going to bottom out and we're going to just start picking up and it'll become unaffordable. So it's better to I know it's a cliche, but they say, don't marry the rate, marry the price of the home kind of thing. What's that term?
It's
date the rate.
Buy the house. Marry the house and date the rate.
Date the rate and marry the price. So that's what you should be doing right now. But that's pretty much it. If you have any questions regarding real estate, mortgages, reach out.
A lot of good things happening. A lot of positivity right now. I think it's only going to get better.
Nice.
Yeah.
Let's rock.